And yeah, we're live.
We're live. All right. Hello, everybody. Thank you for your patience. Welcome into episode 19 of Charts and Checks. Instead of going through a handful of individual stocks and looking at them from a fundamental, technical, and financial perspective, we're just going to kind of do a general taking stock given the concerns in the market surrounding valuation. We are your hosts. As per normal, I am Don Foyani, the gorilla with glasses, and here with me, as always, is Alvaro Pera of the Bilingual Stock Market channel. Say hello to the folks.
Hey, what's up, folks? I was checking on our audio,
No
so
worries.
please drop a comment down below. Welcome back, folks. It's ugly, ugly, ugly out there, so we have a lot to talk about. So welcome. We have Naka, we have Kim Cole. I think that you want us to talk about Meta. So drop a comment. Let us know what topics or what stocks you want us to go over. And yeah, we're here to help. So AMD just reported earnings. It's going down after hours. Today we had another. So we had a negative day then, but
Yes, we did.
the general breadth of the markets has been very negative recently, and we are in a sell the rip market now relative to 2 weeks ago, right? So now the question
Sure.
is like, how lower can we go? What is going to be happening here, taking into account that actually November and December are usually very bullish months for the markets, and so most companies, I mean most of the important companies, have been reporting very well, above estimates,
Yeah, no, of course.
and the reaction, the average reaction has been negative. So I guess that we have a lot to talk about here, right?
Of course. Just as a general note, I feel as though when the market is in a mode where it's looking for excuses to sell, which is where we are right now, it has to do somewhat with valuation. And valuation doesn't matter all the time, but when it does, it comes and goes. And I believe that we're in a stage now where valuation is creating a much harder ceiling than it did in August or October. But that doesn't mean that we need to see a bear market or a 10% correction. We probably, in my opinion, probably get away with a 5 to 7% move. So you'll get a pullback. But beyond that, it's hard for me to believe that, especially with some of the names listed, in the S&P 50 and the S&P 100 outside of the Mag 7, a lot of them are going on sale. You got price going down and earnings going up. Eventually, those are going to find buyers. So this is, in my opinion, not something to worry about, but definitely something to be aware of what's going on. You can't be as laissez-faire. You got to be a little bit more disciplined.
Correct, and you have to be flexible. So the character of the markets is changing. So now we're selling rips instead of buying dips, and you have to adjust to that, of course, from an investing standpoint, and more importantly, from a trading standpoint, right? So yeah, so take a look. Sue is over here. Was the CEO? They're asking about CrowdStrike, Robinhood. So yeah, this is a live stream, of course.
There we go.
Yeah, 100%. So first and foremost, let's make a summary. Or let me make a summary of what happened today in the markets, because this will help us to put things in the right perspective. Let's just put it that way. So the Russell 2000 went down today 1.78%. The Nasdaq down 2% today. S&P 500 down 1.17%, and the Dow Jones down 0.53%. So we had a red day across the board. If we take a look at the 11 sectors that trade inside the S&P 500, we had some sectors actually. Oh, let me, by the way, share my screen here, bro. I wasn't doing it, but I have to do it. Let me, hold on.
You're all right.
Okay. Yeah, so everyone can see what I am showing you guys. So, and since this is live TV, all right. So, financials went up today 0.50. This is 0.52%. Healthcare 0.45%. Consumer staples 0.41%, and real estate up 0.27%. So we had some sectors going up during the trading session, but these sectors cannot hold the SPY up. These sectors
Correct.
cannot hold the S&P 500 up. So if we keep seeing weakness in this gentleman over here, take a look at the tech sector, guys. Down today, 2.64%. If this gentleman right here keeps going down, the S&P 500, or the SPY as you know it, is going down, of course. Consumer staples also got annihilated today. Amazon,
that's not
Tesla, down 1.66%. And communication services down 0.71%. So these are these three sectors are the most important sectors inside the S&P 500. So we need to keep an eye on this. We have a bit of technical damage as of now. We closed the trading session below the 5-day moving average. So from now on, I think, Dan, that we can make a case here that the easy money was already made, right? So we had a lot of market participants, buying call options out of the money calls that were expiring on the upcoming Friday and making good money out of, I don't know, speculative stocks for the most part, like nuclear stocks, the ACLOs of the world, and the, I don't know, what other speculative stock can we name? I don't know, the HIMS of the world, and so forth. So the character of the markets is changing, as we just stated, and you need to adapt to it. And you have to be careful, of course. Yeah, this is not a moment to be buying meme stocks and buying out-of-the-money calls that expire on the upcoming Friday.
Yeah. The only thing I would add to that is that you can sometimes get a flavor of how much appetite there is for speculation based on the trend in Bitcoin, which recently has been terrible. I think for the first time since
It just broke $100,000 to the downside, correct?
Yeah, and I mean, listen, I think that Bitcoin is a bit of a chameleon. It has months or periods of time where it can act as something that's somewhat defensive, other times where it's just the NASDAQ plus, 1 or 2 points of beta. You get the idea, but I think in a moment like this, you should maybe wait. It's weird to say this, but Bitcoin almost seems like the benchmark for speculative appetite, and it's going down right now. So to your point, Alvaro, you probably should be looking at other places to place your long bets, if that's what you're interested in doing.
Correct. Especially if you're, so that's why I just pointed out the 11 sectors of the S&P 500, guys. So if today you guys had opened trades on financials or maybe healthcare stocks, you could have made some money. But if you insist on trading the ACLOs of the world and the HIMS of the world and the, I don't know, the Microsoft of the world and the Marathon Digitals of the world and so forth, you're very likely to lose money. So you need to keep, you have to keep that in mind. And needless to say, if the tech sector, consumer discretionary and communication services keep going down, the S&P 500 or the SPY, as you guys know it, probably has an appointment with lower prices. So you have to be careful. And in an environment of high volatility, you cannot trade individual stocks in isolation. If you are thinking about starting a trade on any given stock, guys, whatever, you name it, Pltr or AMD or Microsoft or Google or Amazon or any of the stocks that you guys love, if you are beholding a situation in which the VIX is rising and the SPY is going down, you cannot trade individual stocks without keeping an eye on the S&P 500, on the SPY. And I would like to show you guys a very specific example about what I'm saying. So this is the SPY. By the way, let me share my screen with you, Dan, so you can see this.
Oh, good, yeah.
Yeah, hold on. So let me do a bit of a technical analysis here of the SPY. So we just said the SPY went down today 1.19%. It closed the trading session at $675.24. So is this the end of the world? Of course not. We are trading above a rising 20-day moving average, rising 50-day moving average, and a rising 100 DMA. So as of now, we only have some technical damage in minor time frames. When I say minor time frames, I am talking about the 5-day moving average. You can see it here, signaling $681.50. Now, take a look at this pink line. This is the 20-day moving average, $672.70. If this level were violated to the downside, this could be attracting more sellers into the S&P 500. And that being said, I wanted to show you guys this. I'm gonna go to our Discord. This is actually Christian's Discord. Take a look at what I told you Earlier on, you can watch this on YouTube.
Yeah,
Done.
you're good.
Okay,
Yeah,
perfect. Yeah, so I don't have to be
no worries. Yeah,
yeah,
no worries.
switching the screen that I'm sharing. So for our guys from Christian's Discord, take a look at what I told you before the trading session opened today, and this is related to what I just told you. So take a look at 9:03 a.m. I said, happy Tuesday for y'all. As you guys can tell, the rug got pulled out. This situation is affecting the vast majority of stocks out there. So today, all eyes will be on the SPY rather than on individual stocks. I warned you guys about this, and the same thing goes for the members of our Discord in English. Take a look. I have a channel here in which I am narrating the trading session on a real-time basis, and I said to the guys the same stuff that I told you, that I told the members of Christian's Discord. The same thing. We have been talking about a tremendous deterioration in the general breadth. Let's see if the bros can deliver today. Guys, needless to say, take a look at these guys. This was set at 7:58 a.m. Today, if you want to trade individual stocks, you have to keep an eye on the SPY. Take a look at this. This is a learning moment for the newest out there. Under the current environment, 98% of stocks will be simply following the SPY. If any stock you want to start a position reaches a level of interest, but the SPY keeps going lower, that level of interest on an individual stock is unlikely to act as support. I warned you guys about this. And let me go back to Christian's Discord. Take a look at the point at the level that I pointed out before the trading session opened, guys. Take a look at 9:29 a.m. I told you, keep an eye on $675 at the open. Again, guys, look at the time. I cannot be making this up. 9:29 a.m. The bulls need to sustain price above this level in order to avoid a flush down right at the open. Then I said at 9:41 a.m., $675 is holding, guys. There could be a bounce of this level. So let's reconcile this information with what actually happened in the SPY. Again, 9:41 a.m. Let me pull up here a 1 day, 1 minute chart of the SPY, and let's go see. So at 9:45 a.m., I told you, here, look, 9:40. So the SPY found support at 9:40 a.m. at $675.30 to the penny. And take a look at the bounce that took place here, guys. Let's go back to Discord. What did I say? There could be a bounce off this level at 9:41 a.m. Do you guys believe that there was a bounce of this level? Take a look at this bounce. I cannot be making this up. And then I said, and I told you, here, look. Gap almost filled up to $679.80. It's a potential resistance zone. So if you have any runners here, you could lock in the profit. Take a look at today's high, guys. $679.84. If you followed this information, if you kept an eye on this information, you were able to trade the SPY successfully today. No doubt about it. And the same thing goes for the members of our Discord in English. Look, let me go to my Discord in English. What did I say? Look, the same thing. Look, at 9:34 a.m., if the bulls can sustain price above $675, $675.20, which was the pivot that we determined pre-market, the door opens for $679.80. Take a look at the time, guys. 9:34 a.m. And if we reconcile a chart of the SPY with any other stock, and you name it, guys, you will see the correlation. So, I don't know. Let me pull up a chart here of what? Let me pull up a chart of Pltr. Take a look at this 1 day, 1 minute chart of the SPY, guys. And look at Pltr. What happened? The same thing. Drop at the open, bounce off the 20-day moving average. It's the same pattern. You can see it right on. It's very obvious. Yeah, the same pattern. Yeah. Right. And then, I don't know. We can take a look at, let me see. Hold in here. So you guys can tell the difference. Look at, let's take a look at Microsoft. So why did this happen? The same thing. A bit of downwards pressure at the open, and then it bounced. So why did this happen? Because in an environment, guys, in which we have the VIX rising and the S&P 500 going down, most stocks out there simply follow whatever the SPY is doing. I can keep showing you technical charts during an hour or 2 hours or 3 hours for that matter, and you will see the same pattern. So since we have a bit of technical damage here, because we closed the trading session below the 5 DMA, tomorrow you have to keep an eye on the 5-day moving average, which as of now is signaling $682, the 20-day moving average at $672, and keep an eye on the VIX. If the VIX rises and the SPY goes down, you cannot try to trade individual stocks without being aware of the levels of interest of the SPY. Yeah, and if you have any questions about this, please let me know. All right. That being said, how lower do you think we can go here then?
Let's take a peek then.
There you go.
I mean, just to kind of.
Do you have any levels of interest? Because as of now, we are
on the S&P.
Correct. Because how of the highs are we in the case of the SPY? It's like 2.50%, 3% the most.
Yeah,
something like that. But underneath the surface, a lot of stocks, I would say that more than 50% of the stocks inside the S&P 500 are going down as of now. So we're having like some sort of a silent correction. Let's just put it that way.
Yeah, if we were to see another Mag 7 name, like besides Meta, start taking a dump downward, you'd start seeing it in the indices a lot more. With respect to the S&P 500, where's the share? Here we go. With respect to the S&P 500, probably going to be looking at this green line I have here, which is at 67.90. It's where it struggled to break above prior. And then if that doesn't hold up, just look for the 50-day simple moving average, which is 6,654, around there. But I mean, beyond that, I'm looking to talk about technical damage. I like to look for the, I'll get rid of this. This isn't important. In blue is the 5-day exponential, and in gold is the 13-day exponential.
On the daily, right? That's a daily chart, right?
Right. Yeah, okay. And this is a year to date.
Okay.
We can zoom in a little bit just so it's a little bit more instructive. When the 5-day goes below the 13-day, that's called a bearish crossover, which would indicate that short-term momentum has firmly gone the way of the bears. However, the 5-day is still above the 13-day. And as long as this remains the case, I think you can remain constructive. It doesn't mean go all in. And right now, we're clearly on a collision course for that bearish crossover to happen. But, you know, if you take it back, if we look year to date, it went negative in February and would have kept you out of the tariff tantrum and then got you back in April 23rd. I mean, you would have crushed it listening to this thing. I mean, there were a couple, quick fire 1 day, 2 day where you would have gotten in and gotten out, but this tends to be a pretty good indicator of when you can be constructive or when you should maybe be cautious.
Gotcha. And yeah, it was super accurate, right? Back in early April.
Very this year specifically, yes.
Yeah. So the question is, and we know that we have this tradition of the Santa Claus rally, which kicks off in early December, and usually, I mean, according to the stats, it should end in early January. Do you think this is an excuse in order to, let's say, capture a bit of liquidity, so we can have the so-called Santa Claus rally?
Maybe so, but we have to be cognizant of the fact that obviously the Santa Claus rally has a handful of data points to it. And we also know that September tended to be a pretty weak month for stocks, and that wasn't the case this time. So
in October, we had the first positive October within the last 3 years. So we had a weird October.
Right.
So,
Right.
Now they're taking profits.
What I'm trying to say is, when we were doing the Santa Claus rally, you were generally coming from a much weaker position. However, I mean, I ran the stats when we had a positive September, and when you have a positive September, 1 year down the road, you're 11% higher than you were. It's not a straight line, of course, but maybe we don't get the Santa Claus rally because we've pulled so much of it forward. That doesn't mean we have to go straight down, but it also doesn't mean it's going to be a slow grind higher.
So
I go back and forth on this, Alvaro, because I still think people are chasing. I still think there's a lot of chase. And if you look at today, even though it wasn't a great close, it wasn't terrible. It was just more rotation. So I don't really feel any kind of way about this.
So do you think the dip gets put up sooner rather than later?
Yeah, eventually.
So you will be ruling out a top being in.
No, I don't think we
for
topped.
the year.
I think we'll
Okay.
top in December.
Okay. Perfect.
Yeah. I mean, like, here, real quick, just take a peek at this. And I shared it with Discord at one point. But I mean, just we can see
I'm asking Dan because a lot of stocks of very good companies have been going down in a noticeable way. Let's put it the way I can.
Sure.
I can
you
say.
can see it on the chart.
Correct.
Yeah.
Like Meta. We can maybe name Oracle. I mean, we can have an argue about Oracle's valuation and stuff, but in the case of Meta, it's down pretty much 17 or 18% of
Near
its most recent all-time highs. So, would you be interested in starting to buying some dips here, or would you be a bit more, cautious
we talk
and
about
wait
this
for
quite
lower
a bit.
prices?
We talk about this quite a bit. You need to wait for buyers to come in. So I'm not pulling the trigger now. But nothing has changed fundamentally or financially about, if you want to take the examples we just gave, Meta or Oracle in the last 2 weeks. The only thing that's different is the price.
I mean, for Meta, it changed. It's cheaper now. The stock is cheaper now.
Exactly. The price went down and the earnings went up.
Correct.
So you have a PE that's better, or more attractive, I should say. And
I mean, and other metrics. I mean, price to free cash flow and price of sales, the whole thing.
All of it.
That's what I was telling the guys today. Like, if you liked Meta, I don't know, a month ago at $750, you should like it more here, of course, because it's a 100%. Cheaper stock and the earnings went up, and revenue went up as well. So yeah, of course.
Yeah, and I mean, I think what's important for people to understand, especially if you want to start, looking at these names, you of course have to wait. But this to me is not it's going to sound a little odd. It's not a scared market. If you look at the heat map for today, this is just the S&P 500. You had money come out of technology and the stuff that's worked, out of software, because people decided that we don't like Palantir anymore, so we don't like software anymore. I mean, that's going to last maybe a week, who knows. But the money went places. It went to financials, it went to healthcare, it went to defensives. And if you zoom out and look at all the stocks, it's the same picture.
Yeah, that's what we were talking about. Like, so the menu of stocks that the guys are trading
is out of favor right now. The typical
it's out of favor, so it has to broaden out. So you need to broaden out your menu of stocks. You can, if you know that the markets are punishing as of now, for the most part, higher multiple stocks and tech stocks, and if that situation keeps going on, you shouldn't be trying to trade Robinhood tomorrow. Let's just put it that way, or Aclo, because unless you buy puts, you will get annihilated. So that's what we are. That's the main message that we are trying to deliver here, right? Like, you need to understand that, at least today, because the breadth yesterday was very, very, very ugly, except for, we only had a few stocks going up, like Nvidia and Microsoft and stuff like that.
Correct.
But today we had a bit of rotation into healthcare and financials. We just pointed that out, correct? Real estate and stuff. So if that keeps going, for the remaining of the week or maybe the month, who knows? You need to start thinking about trading, different stocks relative to the stocks that most of you guys have been trading during the last 3 or 4 months, because the easy money on the Oculus of the world and maybe the Palantirs of the world and the CrowdStrikes of the world and so forth, maybe was already made, and now maybe you guys need to rotate a bit. So, and speaking of. They're asking.
Just,
go ahead.
Before we move on from that, I think the point that I was trying to make by showing you that was that so long as there is rotation, you can be comfortable that we're still in a very healthy bull market. And if we're in a healthy bull market, then of course you can look at buying Meta or Oracle at a discount. You just have to be patient.
Correct. If the rotation keeps going, we'll see. We'll be evaluating and keeping a close eye on the general breadth. Yeah, which was deteriorating significantly during the last 3 or 4 trading sessions, and that wasn't the case today. But we had a red day across the board. So, and in the case of the SPY, actually, we had more stocks going down than up. We reviewed that as well, right?
Yes.
So it was not a good day.
You did a very good job thoroughly going through that. And even if you zoom out to all the stocks, we had more declining issues than advancing issues. But the point being, the money went into other things, and it was at a very gradual and orderly decline. It wasn't fearful. This felt very controlled.
Yeah, in the case of the S&P, we had 282 stocks going down, 221 stocks going up. So I guess that the RSP had a negative day
Yeah, but not as bad as the
not as
S&P.
bad. Yeah, so it went down. Yeah, of course, it is a an equal weight index. So yeah, with more stocks going up than down, going down than up, then it obviously closed in negative territory. In the case of the Nasdaq 100, we had 73 losers versus 21 gainers, and the IWM was horrendous.
Well, yeah, the Russell's going to get smacked.
1,352 stocks going down and 569 stocks going up. Oh, so we had this ongoing situation about the shutdown of the government. So we have I mean, there will be a resolution for this situation eventually, and the markets are gonna, or likely, going up, at least, in a transitory way. Let's just put it that way. Once they get a deal. And you were telling me about airlines, right? We were talking about that earlier on today. That airlines could be a beneficiary of a situation in which we get an agreement on the shutdown.
Mm-hmm. So,
do you want to elaborate on that?
Yeah. Sure. For those that maybe don't quite know the story, due to the government shutdown, it is hard to pay the people working at air traffic control because it's federally funded. The people that are coming into work right now are doing so with the promise of being back paid. And what's going on as time continues to move forward, a lot of them are calling in sick. Listen, that's just what they're doing. It's what the government says they're doing. But everyone knows that when there's an uptick in sick leave because they're not getting paid, it's pretty clear they're making a stand. As a result of not having as many air traffic controllers, the airlines are not allowed to schedule as many flights. Less flights means less demand, less supply, which means less revenue. And so these stocks have taken it on the chin. Here, I'll quickly pull up the Jets ETF, which is a pretty broad collection of all of the airlines that we all know and love, like Delta, United, Southwest. I think that makes up 30% of this index. So in here you have, this is a year-to-date daily chart. In this pane right here is OBV, MACD, and then RSI in that order below. But the moving averages, it's on a date with the 200-day at 230.366. This hasn't been a great chart. Government shutdown's been around for about a month. So if you just look at the last month,
it's about to become the longest shutdown of the government ever, I think.
Yep.
We are about to break the record.
I think the longest one prior to it was arguing over funding for the border wall during Trump's first term.
Correct.
But that's neither here nor there. It lost the 100-day today, so that's not a great sign for Jets. If you want to talk about the airline that I think has the most upside, it's probably Southwest. It also looks the worst over the last month. It reported earnings here 2 weeks ago. In fact, I can pull up the earnings so you can see it has a red E. It says it missed. The quarter was actually fine, but Southwest does the most, their entire business is pretty much domestic. So with the amount of flights going on domestically going down, they're the most likely to get hit. I don't know when the government shutdown ends. It seems like it needs to be sooner rather than later. I feel like you can buy a flyer position in, Southwest or Jets, or maybe the best of breed, which would be Delta Airlines, DAL. And when the government reopens, you sell that pop. Yeah, so I don't know.
That would be.
How would you play it? Through options or through the common?
Yeah, I mean, maybe get him some out of the money called options. So the thing is that So if the markets keep dropping, the second they get to an agreement on the shutdown of the government, we are likely to see a pop in the SPY and on the IWM, which is a very index. It is an index that is very sensitive to the real economy. So we could see some sort of a pop. But I mean, if we keep going down, that is going to be a test for the bulls, right? Because if that pop gets faded, then that is going to be that will not be, but it will not be positive for the bulls in general terms. Yeah, I mean, but we have a pop coming probably based on a potential agreement, right?
The only reason I might want to do common over the call options is because in the event that, let's just say it rips pre-market, but then the open, you don't get the same, it comes down, you get the rip.
You can get an agreement at 6 a.m. and they go higher and then they sell the rip. Of course, it could happen.
Right, 100%. Right. So I don't know. I'm probably going to wait and see. I feel like you need to get some sort of resolution to this, because it's becoming an issue as far it's hard. It's weird to say this, but travel's a huge part
as of now,
of the economy.
Yeah, they are talking about two potential reasons why the markets are feeling nervous: AI valuations and the situation with the shutdown of the government. So, if you put that aside, then I don't know, maybe the concern about the valuations keep going, but we'll see.
It's funny. It's funny you say that. I think that we're just at the point where, like, we want the government shutdown to be over. If that's out of the way and you have consumer spending again, you have business operating in a normal way, I think you get rid of a lot of the pessimism. It's just difficult if you're looking at an S&P 500 that's trading at 22, 23 times earnings. Things should be perfect.
Yeah, your price.
And the government being shut down, not perfect.
Yeah, sure.
So I think it was just a market ran out of patience.
And of course, this is like, we're just making stuff up here. Who knows what is going to happen with the markets? We just need the technical charts.
No, dude.
Yeah, we just need to follow whatever the technical charts say. That's it. And make our decisions based on the technical charts. Yeah.
That is a great point. Because me and you are looking at price action and trying to explain it.
Correct.
That's all.
Yeah, we just
it's
correct.
It's not. Exactly. This is not. I think like what I talk about, like valuations are a concern all of a sudden. No, maybe we're finally out of patience for the government shutdown. It's just because we got these headlines and the price action happened on the day. You know, like it's not something I feel super strongly about.
Yeah, and a 5-7% pullback is going to be very healthy for the market. So no one is going to be complaining about that. So just keep that in mind. And as of now, we have some technical damage, so we have a bit of overhead supply. And yeah, I mean, maybe we could have some fireworks. Oh, by the way, tomorrow at 8:15 a.m. we have the ADP payroll coming out, which is the only report about the labor market that we are getting so far because of the shutdown of the government. So that could be a market move at 8:15 a.m.
Yeah, weird time, but yeah.
Yeah, so just keep that in mind. Hey, bro, they are asking about Nbis, Supermicro, Robinhood. Robinhood reports tomorrow, by the way, so none of you should be doing anything about Robinhood because it is reporting tomorrow. And I don't know if you guys noticed that since we are in a sell the rip market, it doesn't matter what you report. Your stock is going down. That doesn't imply, however, that you should be buying puts into Robinhood's report. Because if you buy puts, the stock is going to go up. But, I mean, bro, aside from the valuation, which is very excessive and very high, and I've told you on multiple occasions that I cannot wrap my head around Palantir's valuation. So if Palantir couldn't go up after having reported extremely better than expected, and I don't see any other stock going up after reporting. So we are in a sell the rip market. Maybe this is the initial phase of a corrective process, and we're going lower. I don't know, but so no one should be doing anything on a stock that is about a report, which is the case of Robinhood. Any thoughts? Any thoughts on Robinhood?
Yeah, the only thing I would add there is that Coinbase had a fantastic quarter. In fact, after they reported, they had a nice day. They were up 6%. Unfortunately, all of that has gone to has completely reversed in the past couple of days. The big part of Coinbase's quarter was actually their transactional business, which means trades are being made. I think that's a pretty obvious read through that Robinhood's going to be fantastic. But to your point, Robinhood rallied 6% the same way as Coinbase did on that day and then gave it all back. So I think the market knows what Robinhood is going to say. I don't think it's going to be a surprise. It's really just going to depend on the general market sentiment that day.
We have a 10% expected move. 73% of earnings whisper subs believe that the company will beat on earnings and on revenue, and 64% believe that the stock is going up. So it's a 10% move, which implies that Hood could be going up. Let me see, Hood either up or down. Let's see. So there's technical damage here. Hood broke the 5-day moving average to the downside, also the 20. So a 10% move would be approximately, we're looking at $15, ish.
I mean, you'd maybe breach the 50-day. The 50-day is 128.
Correct.
Yeah,
exactly. But
I don't know.
so thing is, guys, you guys want to know about Robinhood, and we have a $15 move, you know, taking place tomorrow after hours. So you don't need to do anything about Robinhood as of now. Just stay away from it.
Agreed.
They are asking about NBIS. Do you happen to have any levels or comments
No,
about?
I don't really follow Nbis. I'll be completely honest.
Nbis?
I could pull it up for you here. I'll pull it up though.
It's been holding. I haven't taken a look at the chart in quite some time. It's been holding $100 recently, right? It's become a demand zone. Is it? Yeah.
Yeah. No, this has done really well for itself. I mean, I don't know. Did you say they're reporting, or is it just?
No. They are asking about NBIS. Someone asked about NBIS. So
yeah, I mean, like, listen, as long as the 50-day holds up, you can stay long. My only concern is that OBV is trending in the wrong direction, meaning that on red days there are more sellers than there are buyers on green days. And and MACD, which is really one of my favorites, it looked like it was going to have a bullish crossover, and then failed. It doesn't mean anything so long as the 50-day simple moving average holds up. But if I were to take a guess right now if that 50-day was going to hold up based on these underlying technical indicators, I'd actually have to say no. And if we take a look at the 5-day, 13-day, but I'll get rid of the 21-day. Same thing as before. You're about to get a bearish crossover here. I would be very cautious with NBIS.
Okay. And above that potential bearish crossover, what level are you looking at then?
Sorry, say again.
So say that the stock bursts above that potential bearish crossover. What level? Oh. So those moving averages are coinciding at what level? What price?
I mean, at 119.
119. Okay. So ideally, you guys should wait until the stock bursts above $120.
Sorry. Yes, I didn't understand the question. Yes.
Yeah. Mm-hmm. Yeah. You have like a bearish crossover, but those two moving averages are coinciding, right? So that's,
yeah. Here, I'll bring it back.
Over the level. Okay, correct. So 120.
Yeah, I mean, honestly, if you're gonna wait for 120, you almost want to wait for 140. I don't like the fact you had a lower high. If you don't make a lower low, it's not the end of the world, but it's hard because when you get into these higher highs and higher lows, eventually you meet in the middle. You form like a flag, and if that doesn't go your way, you're really out of luck. This is not my favorite kind of setup.
And in the case of Nbis, there's like a correlation, guys, that this stock has relative to Microsoft and CoreWeave and Oracle. So if that combo is under pressure, it's not a good time to start the position on Nbis. That is also an aspect to keep in mind. Let me take a look at the market structure of NBIS. Let me take a look at the demand and the supply, just to see if we see something positive. And it is a tough time, guys, to do technical analysis on individual stocks because, again, guys, most stocks out there are simply tracking the SPY. So no, I've been having an issue with this website during all day long. Let me see. Let me give it another try. No, I don't have it available. So okay, that's okay. So that was NBIS. Do you have any thoughts on GE Renova, GEV, Dan?
Yeah, I do. Here,
that's a stock you know, right? I mean,
yeah, I still own it. It was a small enough position. I thought the quarter was incorrectly maligned, but it had a weird day. All of a sudden, it just decided to drop like 6%, and then this is the 2-day chart. It just kind of went down all day. I couldn't find any news.
Now we have concerns about AI valuations, and this stock became an AI darling, like data centers and stuff like that. So if this narrative keeps going, this is a stock that will not benefit from these AI concerns. Keep going on.
Right. Now, I mean, technically speaking, every time it just can't seem to even hold the 5-day exponential moving average since the earnings print and even a couple days beforehand. So you want to wait. This really hasn't been something you should be constructive on since it looks like that crossover happened October 16th. Personally, I mean, I know it closed below 550, but that is kind of the level that needs to be watched. 550 is now in green here. This is the level it was trying to get above 2 earnings reports ago, and this was kind of a bit of a blockbuster report. But I mean, RSI is trending in the wrong direction at 35. MACD doesn't look good. It lost the 50-day and
the
the
chart
100-day.
doesn't look good. The chart doesn't look good. Yeah.
This is the don't be a hero. And if you're not married to this, I would get out of it. I just happen to really believe in the story, and the position's small enough for me to add. So I'm going to wait until buyers step in. It looks as though 540, that's kind of where it found some support at 542. It looks like that level is holding up. It doesn't really match up to anything. It's just kind of 540 is the number. This is not something you want to be. I wouldn't touch this right now, but as an investor, someone who wants to be in this name for a long time, I like what they do as far as they basically supply all of the equipment that we were required to update the electrical grid in the country to be ready for AI, be ready for mass EV adoption.
Yeah, it's an AI play. Like, wow, 1 million %. Go figure. I didn't know they do that.
Adjacent,
I didn't know they do that.
Exposure that
wow.
way. So
wow.
Yeah.
Hey, bro, we have an international guest. So,
We do.
Jose, hi from Slovakia.
Okay.
How about that, man? Hello,
Nice.
brother.
Welcome.
Yeah. What time is it over there? You must be about to go to
Probably
bed.
close to midnight.
Yeah, he must be about to go to bed. Yeah, he was watching the Champions League games, I guess, and now he joined the live
Oh
stream.
shit! No kidding.
Yeah, we had some interesting games today. Liverpool and Real Madrid and Paris Saint-Germain and Bayern Munich. Okay, so they are asking, let me see. They were asking about Lyft.
Oh, Lyft.
Yeah, oh, by the way, Uber reported today. You are an Uber bull. Any thoughts about that? Oh,
Yeah.
By the way, I mean, I checked on the report briefly, so I haven't been able to dig into it. But it was a very good report. And there you go. The RIP got sold because this is a sell-the-RIP market.
No. It's not what happened.
Oh, really? You sure? Last time I checked, it was down. The stock was down, bro.
Uber?
Yeah.
The dip got bought. It opened lower and then got bought.
Yeah, but so the stock, what I meant is that the stock went up once the report came out. And, I mean, there were no buyers to sustain price at...
Can you show me then? Because I remember this one being down. Like this one was down the entire time I watched.
Let me show you a 1 day, 1 minute chart.
So, here, hold on.
So
yeah.
hold on. Yeah.
That's your thing.
I listened to I saw
I believe you. It's just that as I remember
look down. So the report came out and the stock went up to $99 and then it sold off down to $90. And yes, we can make a case that the dip got backed because this stock closed above today's low, which was $90. So now it is Uber, from a strict technical standpoint, it is in the midst of some sort of, spider moving averages
I don't
web.
see it.
So take a look. No, you have to take a look at YouTube.
But the stock reported in the morning. It looks like the second it reported, it went down.
Now look, the first reaction was to the upside. I swear to God, because
is that?
This was at 7 a.m.
Oh, okay, 7 in the morning. All right, never mind.
It reported at 7.
Take a look. Red candle. I don't know. I mean, all right, whatever.
So it's trading within several moving averages: the 5, the 50, the 20, the 100 EMA. So ideally, and someone asked me about Uber earlier on today. I would like to see Uber above the 5-day moving average, so being able to consolidate above $97. And I would be careful because, the dip got bought out because the stock closed today's trading session above today's low, which is good. But if this 100 DMA breaks to the downside with the markets as a whole going down, we could see a further selling pressure here. So, not a fan of the stock. I'm trading within all of these moving averages, and I would rather see Uber trading above the 5 DMA, so above $97-ish. Any comments on the report itself, then?
I couldn't disagree with you more. I think the report was fantastic. I know you agree with that, but I think the stock looks really good given what we saw in the market today. It opened down 9% and closed the day down 5%. As for the report itself, EPS was $3.11. Apparently, it's not comparable to the 68 cents that was prior, but revenue beat $13.47 billion versus $13.28. Mobility bookings were up 20% year on year. Delivery, which is Uber Eats, gross bookings were up 25% year on year. The guidance for gross bookings was higher. The lower end of 52.25 billion was higher than the estimate of 52.1 billion. And the upside of that range is 53.75 billion. I think they crushed it. I told people in your chat, or in the Discord rather, that if we saw a close above the 100-day, because it has obeyed that moving average specifically very well, I would add to it. And I mean, you have below it.
You would be a buyer below the 100 DMA, right?
It's above the 100 DMA, yeah.
No. Say that it breaks us to the downside. Yeah. So that's what I was talking about, because I wouldn't like to start the position on the stock below the 100 DMA, $93 ish. But so you're saying that you would be a buyer below the 100 DMA, right?
I bought it today because it closed above the 100-day.
Okay, gotcha. So you waited for confirmation. Okay, from buyers. Okay, perfect.
I don't get me wrong. If you need to now see it the next stop is the 50-day, but here, I feel like with a quarter like that,
$96.
Yeah, with a quarter like that, MACD is still positive. RSI only went to 50, and the OBV is still at a higher level, despite the price being at a lower level. I think this is a bullish divergence. I think this candle's a faker, and if we get confirmation tomorrow, we'll know. It was a fantastic quarter, and it doesn't sell at a crazy valuation. It's actually it's classified as an industrial stock. I'm not sure what else you could have asked for from this one.
Okay. And in regards to Lyft, any thoughts?
No.
Did it benefit from Uber's report?
I don't know. I could share.
But no, they are asking about Lyft specifically, so that's why.
I don't know. This is the chart of Lyft. It's been down since it made its deal with Waymo.
But the share doesn't look that bad then, right?
Yeah, it's fine. It opened
kind of consolidating,
above the 50-day and lost the 50-day. And MACD is negative, and RSI is going in the wrong direction. Let's check the 13 and 5-day here. Not bad. I mean, you had a bearish crossover, but it's not the end of the world.
It broke the 5, the 20, and the 50-day moving average. So yeah, I would have to take it. I would have to take that back. So let me pull it up here quickly.
Yeah, I mean, I'm just showing this level here, $19. If you lose 19, look out below. That's going to be problematic.
Correct.
I still think.
And when the Waymo news broke out, this stock was trading at $20. So it already gave up all of the gains from the Waymo news. There was a partnership here, right? I think in Tennessee or something. So
that Nashville, you got it.
In Nashville, correct. So this isn't positive. When you guys see that good news came out about a stock of a company, and that news gives rises to a positive reaction, but afterwards all of those gains are erased. So that's not a positive thing. So you should stay away from Lyft below $20. And at $20, we actually have pretty much a convergence of the 20-day moving average, the 5 DMA, and the 50-day moving average. So ideally, you should wait until buyers are able to push price above $20, which is it is an important level from a psychological standpoint. So the stock popped based on the partnership with Waymo from $20. So ideally, you guys went to see Lyft recapturing $20 in order to go down the stock, correct?
I still believe that partnership with Waymo is just to give Google some leverage when they talk to Uber about this. Waymo doesn't have the reach to do this in all the markets Waymo wants to be in. It was smart by Alphabet, and it doesn't mean that Lyft shouldn't have seen any appreciation. It's, in my mind, the thesis that there's going to be more Lyft Waymo partnerships at the expense of Uber is not the right take.
Yeah, I agree with that. I mean,
listen, I could be very wrong. That's my opinion.
I don't see Lyft becoming a serious competitor to Uber anytime soon. So the markets received the news like, okay, I mean, at least this is like a light at the end of the tunnel for Lyft, which is a stock that the stock has been dead money for, I don't know, like 5 years. So yeah, that's what happened apparently with Lyft. What else do we have here? Let me see. Oh, bro, let's address the elephant in the room. We need to address the elephant in the room. So Pltr. Let's address it. The report was phenomenal, unbelievable. I mean,
Yeah.
correct me if I am wrong. If you, I don't know, or if you happen to disagree with me, this was the best earning. This was the best earnings report during 2025.
Yeah, I'm going to quote myself.
So the growth that this company is showing is something that I've never seen before. At least not in a in a $400 billion market cap stock.
So
But,
yeah, I go ahead.
No, go ahead, bro. I'm listening.
Yeah, I just wanted to share like cards on the table. I wrote this earlier today. I said I was talking about companies that got sold off of great news, and I put Palantir on the short list of best numbers from a software company ever. But I don't know, valuation, let's just sell it. Yeah, I think this could have arguably been, I mean, it's hard. I would go as far as to say the best earnings report this year, absolutely, yes. Best software earnings next to when ServiceNow came out and they asked Slootman if he was serious about the guidance, and he responded, the guidance is the guidance, rivals that one. The only other earnings report in like of all time, I think that could be better than this and the ServiceNow one was NVIDIA back in 2023 when they actually showed that they were shipping these chips, and Jensen wasn't just puffing smoke when he was talking about AI taking off.
Yeah, this was an NVIDIA's
fantastic
report.
Quarter.
Yeah, it was a phenomenal quarter. Now the question is like, is this as bad as it gets? I mean, Alex Karp says that isn't the case, that the company will keep growing, in an exponential way. So yeah,
that was one hell of an interview he did this morning.
Yeah, I listened to it. Yeah, he sounded very bullish, and he ended up getting on Michael Burry.
Yeah, Burry.
Yeah, for
Burry's ass. Yeah, it was funny.
Yeah, for the share position. So, let me go over the technical chart here quickly.
Oh, all right. Here, I'll get rid of this.
Yeah. So, this is a cold stock, guys. The report was very good, and the valuation is insane. But we don't trade based on valuations. We trade based on the technical charts and momentum. So ideally, you guys don't want to see Palantir giving up this 20-day moving average, $185. By the way, the stock bounced today right at the expected move, which was $22. So the expected move was exhausted to the downside, and that was the place at which Palantir came across with buyers. So from a strict technical standpoint, keep an eye on the 20-day moving average, $185. If this 20 DMA breaks to the downside, I wouldn't be surprised if we see a test of the 50-day moving average, $176. And in the case of a bounce, aside from the bulls being able to hold the 20-day moving average as support at $185, ideally we want to see Palantir being able to sustain price above $190. This is a previous level of resistance. This is also a previous all-time highs for Palantir. So maybe a potential process of consolidation above $190 could open the door for a test of the 5 DMA at $198. So these are potential scenarios that could be taking place for Palantir in the upcoming trading sessions. But again, guys, I mean, all of the technical analysis that we are doing today are subject to whatever the markets do as a whole. We have a bit of technical damage in the SPY. The S&P 500 is trading below the 5 DMA. Maybe the 20-day moving average breaks to the downside. So for any bullish scenario to play out in the case of Palantir and any other stock that we've reviewed today, the SPY needs to catch a break and go up. If it keeps going down, then it's a whole different situation. Can Palantir be a short? Yes. If this 20 DMA breaks to the downside, 185, with the SPY going down, and the Qs going down and the VIX rising, there could be a short opportunity here from 185, maybe down to the 50-day moving average at $176. That being said, I think that this stock has become a phenomenon. It is a super gold stock. They reported very well. No one can tell where the top for the demand of Palantir services is at. It's impossible. So the bullish narrative in regard to the stock will remain on the table. So I don't know how lower can Palantir go. I don't know. You said the price you want, guys. I don't know. 170, 150 bucks. But in my opinion, the likelihood for this dip to end up being bought up is very high because this is a cold stock. They reported very well, and the story remains very, but very sexy. This is a very sexy story. So, yeah, I think the dip gets bought up sooner rather than later.
I think you covered it very well. I don't have anything to add. You can still be very constructive, and I know there's some short-term damage, but it's not even that bad.
Correct.
Chart looks fine.
Yeah, unless I don't know, we see maybe the 100 break into the downside. But take a look at the slope of the moving averages. We have a rise in 200, rise in 100, rise in 50-day. So
it's hard for me to get worried about this one.
We have potential levels of demand to the downside, and yeah, for me to turn bearish on the stock, I would have to see it closing candles on a weekly basis below 164, the 100 DMA. This is a rising 100 DMA, so it is potentially pushing price up. Yeah, there you go. Any other requests here then that we could cover? Let me see.
SMCI is there. I think
they just reported. They just reported. And the stock is down.
Know. I saw the numbers. They didn't look good.
And the stock is down, I think, significantly after hours, right? Let me see.
I'll check the earnings hub thing in the
okay.
Discord.
Let me take a look at the technical chart. Looking ugly. Yeah, the stock went down.
Yeah, hold on. Let me share something.
Wrong. So it went down today 6%. Closed the trading session at $47. It is down $8 after hours. Keep an eye on the 200 DMA, 200-day moving average, $44. If this 200 DMA holds as support, maybe the stock could be attracting buyers into it tomorrow. But if we happen to see Supermicro closing candles below $44, this is not a good looking chart by any stretch of the imagination, guys. So this would be very negative for Supermicro.
That's terrible looking.
Yeah, it looks very, 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 very bad. So be careful here, guys, and don't try to be a hero.
Yeah, I mean, let me just read some of this stuff. Revenue was a miss, $5 billion versus $6 billion. I'm just kind of rounding here, down 15% year on year. EPS 35 cents versus the estimate of 41 cents. That's down 52% year on year. Gross margin 9.5 versus the estimate of 9.63. That's down 3.6% year on year. Guidance actually beat. Revenue is actually a significant beat.
I gotta tell you something. This is an old trick from Supermicro. So they usually report worse than expected, but they raise guidance. It's an old trick. They do it all of the time. They miss across the board EPS and revenue and stuff like that, but they raise guidance. So it's an old trick.
I think that might be SK. I see it in the YouTube. That might be from the Discord SK. I am never going to trade SMCI. Once they had their accounting issues where their accountant said, we don't feel comfortable signing your books because we don't think you're being transparent with us, was to me the big red flag that signaled, all right, if an accountant refuses to sign off on the books, how could you trust it? That's not to say you can't make money. It's just, for me, there's so many nuances and so many difficulties in doing this job correctly. Why would you give yourself the extra, let's just call it a landmine, to where all of a sudden you wake up, it's just a random Wednesday in, the middle of the week, nothing is happening. You just see, oh, they're being brought to court for financial fraud. It's down 20.
That is exactly my case. I lost money on the stock, never touch it again. That's it.
I tried to talk my friends out of it even before that case happened, because they were basically, to your point, they were basically saying they were going to match NVIDIA, kind of growth. And that's why the stock went so fucking crazy. And then the accountant said,
They always lie to guidance, and that's what I'm telling you. The same situation is going on as of now. So they miss on revenue, they miss on EPS, but they are raising guidance. No one believes.
If you're looking for guidance. A short candidate, look there.
Which stock are we talking about? Supermicro, Sui. Yeah, we're talking about Supermicro. Correct. Yeah. Can we please go over Bull? Webull. Any thoughts on Webull?
Only that Robinhood is better.
Yeah.
Hold on. Sorry. No, I'm just kidding. This,
I don't have any yet. I don't have any ads on the stock, so.
Listen.
I guess that since higher multiple stocks are getting annihilated, this is not an exception to the rule, I guess.
It looks like for the past, let's call it month, this stock hasn't been able to even get above the 5-day EMA and then dropped off today. I don't know if there were earnings or something. The only thing I can say that is constructive is that with an RSI of 28, you are overdue for a technical bounce, and if you get it, I would sell it. There's nothing about this is a 1 year. That's year to date. Okay, let's do 3 months, 6 months. I don't have any. This is a new low relative to April. So that's June. Hold on. How low did it get in April? Oh, it's
a very ugly looking chart. So
yeah, listen, I don't know,
guys. You should stay away from stocks from a trading standpoint. You should stay away from stocks that don't show any technical strength, and that is the case of.
There's no buyers in that name.
Correct.
It is just a bunch of sellers.
It's a magnet for sellers. Correct. Just stay away from the stock, of course. Hey, we are. Let me see. We are an hour in. How about that, huh?
Yep.
You know. So I think that they're asking about Netflix, bro. So any thoughts on Netflix? Good old Netflix. We've been reviewing Netflix a lot. I am a bull of the company, so you know.
Nothing really since we last spoke about it.
Let me go over the technical chart quickly here.
Yeah, go for it. I think the 50-week is still holding up. Here, I'll just get you an updated number on that. The 50-week right now got chopped off. Is at $1,085.77 because there's a weekly moving average. It gets updated weekly, and it's still above it.
So, yeah, we've been in some sort of a risk-off mode during the last, I would say, 10 up to 15 trading sessions, and I would say that is the reason why this stock didn't explode to the upside once we got the news about the stock split, right? Which is taking place on the 14th of November.
10 days.
Correct, from now. So there's technical damage, guys. So keep an eye on the 5-day moving average. It is signaling $1,100. So Netflix closes candles above $1,100. That could be attracting buyers into this technical short, and maybe that would allow buyers to push price up to the 200-day moving average, 100 DMA, $1,124. But be aware of the fact that there is a lot of technical damage here. And keep also in mind that we have a very positive catalyst last week, which is the stock split, and the RIP got sold. This is a sell the RIP market. This is a great example, Dan. So very good news, because this stock is going to be trading at $100 in a few days, in 10 days, and the stock went up, and sellers showed up because the character of the market has changed. They are selling RIPs. They are no longer buying dips. Will they eventually go back to buy dips? Yeah, eventually they will. But as of now, guys, they are selling RIPs. You have to be careful. You can no longer be buying out of the money calls that expire next Friday. If you do it, you will lose money. This is a great example of what we've been talking about during this live stream. The character of the market is changing, and I don't know how long it is going to remain like that. Maybe a week, maybe 2 weeks, maybe the whole thing ends tomorrow. I don't know, but they are selling RIPs, so you have to be careful. In the case of Netflix, there's a very positive catalyst coming up because options are going to be way cheaper. A bearer would argue that, yeah, calls are going to be cheaper, but also put options are going to be cheaper. Yeah, I mean, everyone can make an argument in their favor. So a no touch below the 5 DMA, $1,100, and maybe closing candles above $1,100. We could see a test of the 200 DMA at $1,124. By the way, bro, you were talking about the 50-week moving average. Where do you have the 50-week moving average of Netflix at?
Yeah, I have the 50-week moving average.
That was a very good level that you were pointing out.
Right now, $10.85.77.
So there's a bit of support below the 5 DMA. So the 5 DMA is at 1,100. A bit below 1,100, we have 1,080, as you're pointing out, right?
Yeah, I think you should probably, if you're trying to like get long on this, probably wait for the 5 DMA to go your way. There's no reason to do it. Like, to your point, what about the last 2 weeks of trade makes you think that it's going to change tomorrow? You know, like what you got to wait. Just wait for the stock to give you permission to buy it.
There you go. Awesome. So guys, this is going to be a wrap. It's super dark over here. I guess. I mean, you're in Cincinnati.
Yeah, no, time change, dude. Yeah.
What can we do? It's it feels like if it were like 10 p.m. It's horrible.
Not even 6 o'clock.
Unbelievable,
Sheesh.
bro. It's this is a horrible season of the year. I don't like it at all. So, thank you guys. We're doing the podcast on Thursday, right? Our regular podcast.
Yeah,
of
like.
course.
Yeah.
No, of course. I always like. So thank you, thank you guys. I was like to do the podcast with you. So see you guys on Thursday. We're going to be recording or doing a regular episode of our podcast, Shorts and Checks. In the description box of the video, you have all of our links, our Discord, your new YouTube channel. So go ahead and subscribe to Dan's YouTube channel. We have the link to your what is
the blog there. The blog talks a little bit about the valuation ceiling, and I guess now that you've heard about it, why I like Duber so much in the written form. But yeah, no, perfect.
Awesome. See you guys. See you guys on Thursday then. Thanks, buddy. Take care. Bye bye.
Bye.
Let me close the stream here.